And I would also say that the store of value function of money is the most important function of money, because when you look at nation states, the thing that they really care about is control of the pool of savings. Being able to inflate money allows them to tax the pool of savings in an economy. So what matters is, where are people saving? What is the thing that they're saving in? The medium of exchange role is less important. So Argentina is a good example of this, where people save, if possible, they save in dollars, but they spend in pesos. And for the Argentinian government, that is really bad, right? Because if everyone in Argentina is saving in dollars, it's hard to inflate the money supply because people have their savings in dollars. The government wants you to save in their money, because if you save in their money, then they can inflate your savings away. Uh, so it is possible to have economies where people are saving in one form of money and spending in another form of money. But it's the form of savings that is the most important thing.
Welcome to the 31st episode of the podcast Store of Bitcoin. Today we have a very special guest, Vijay Boyapati. He was also our guest in the first season. He was also our second guest, and we're very happy to have him back again. Vijay is as you probably likely you already know, software engineer, entrepreneur, and one of the most influential Bitcoin thought leaders in the world. He's best known for his seminal essay and book, The Bullish Case for Bitcoin, which has shaped the way investors and enthusiasts think about Bitcoin as not just a currency, but a revolutionary form of sound money. Vijay combines deep technical knowledge with a clear, compelling vision for Bitcoin's role in the future of finance. We are thrilled to have him on the show to share his insight on adoption, risk, and what the next decade may hold for Bitcoin. Welcome, Vijay. How are you
Thank
doing?
you, Alessandro. It's an honor to be with you again, and I am very excited to see the success that you've had with the podcast since I was last on.
Thanks. Hey, Vijay, thank you very much. I
This
appreciate it.
Thanks, Vijay. And I see you're feeling bullish, so that's a good sign.
This
Always
time we have
feeling
also
bullish.
Johan, different from last time, so we'll add also many interesting questions and insight from the conversation. My first question for you, Vijay, is on your book, you highlighted that store of value precedes medium of exchange, and it was several years ago where the Bitcoin world was much more leaned towards medium of exchange was more important. And now it looks like more and more Bitcoiners or people in Bitcoin world are also agreeing that store of value precedes, at least global store of value precedes a global medium of exchange. How do you think this consensus is evolving, and how it will evolve in the future?
Yeah, I think, when you have a model of reality that does not comport with reality, does not match reality, eventually it has to break. If you have this model of reality that you are a bird and you can flap your arms and you're going to fly, and you jump off a cliff, you will learn very quickly that that model of reality is not correct. And I think that's what happened with the people who believed that money was first and foremost a medium of exchange. It was a deep misunderstanding of money, how money evolves, and the functions of money. And this was highlighted so clearly to me with people who would go to merchants and try to get them to adopt Bitcoin, because they would say, this is great money and money means medium of exchange, you should adopt it. And merchants would be confused, like, what is this thing? Why should I adopt it? Why should I even think about it? None of their customers had any Bitcoin. So why, if you're a baker or a butcher or a candlestick maker, why would you accept Bitcoin? And the problem here is that merchants are not interested in adopting something like this unless their customers are demanding it. And for their customers to demand it, they need savings in Bitcoin. And so for that to happen, it needs to be adopted as a means of savings, which is basically a store of value. And that was one of the points that I made in my book, and it's not original to me. It was the fantastic and great economist William Stanley Jevons in the 19th century pointed out that money evolves in stages, first as a collectible, and then it becomes a deeply established store of value, which I believe is the most important stage in the evolution of money, is being adopted as a store of value. That's the primary function of money. Then once it's adopted as a store of value, then it becomes suitable as a medium of exchange, because as a merchant, then you have people around you who value this thing and are holding it and can use it in exchange. And finally, once it's being used as a medium of exchange, people start thinking in terms of it, right? You go to the grocery store, and if you're in Europe, you think in terms of the euro. Like when I say how much is a loaf of bread, you've got a mental model for how much that loaf of bread would be in euros. So because you're doing exchange a lot in that medium of exchange, so it finally becomes a unit of account. That's the final stage of the evolution of money. So to answer your question, Bitcoin is still very much in the early stages of becoming a store of value. In terms of global adoption, Bitcoin as a savings technology, that people are saving in Bitcoin, I think it's single digit percentage of the population globally who are using Bitcoin for savings. Uh, and of that single digit percentage, let's call it somewhere in the 2 to 5% range of the global population saves in Bitcoin. Probably only a small fraction are meaningfully using it as a means of savings. Like, say they keep 10 or 20 or 30%. A lot of that block of adoption is people who might only have a very small de minimis amount, maybe 1 or 2% of their savings are in Bitcoin. So in terms of global adoption of the pool of savings out there, we're still very, very early. And I said in my book, I kind of gave a timeline of 50 years for Bitcoin to become the global reserve currency. That means everyone is thinking in terms of Bitcoin, they're exchanging Bitcoin, they're going to the grocery store and using Bitcoin. I gave that a 50-year time horizon. And the longest part of that is the establishment of as Bitcoin as a store of value. I think that's a multi-decade process. And I think we will be going through that process maybe for another, let's call it 2 to 3 decades before we see full global adoption of Bitcoin. And then we'll start, I think, seeing much more usage of a medium of exchange. Maybe not that long before we start seeing people use it as a medium of exchange. Even today, some people use Bitcoin as a medium of exchange, but it's kind of at the margin, right? You might go to a Bitcoin conference and people are buying and selling things in Bitcoin, or you might go to a specialty coffee shop which accepts Bitcoin, but it's not deeply adopted as a medium of exchange. I think that's going to come in the future, and something to look forward to a few decades from now.
I have some consideration at this point, and I'm curious to see yours about the Salvador case, which started in a way. Then there, if we talk about consensus among the population, that was maybe a bit imposed going from the top, not imposed, but I mean, not organically, not market driven. So, what kind of consensus are we looking at to move from the store of value to medium of exchange? Because yeah, there is a volatility on the one end, so I can understand that the merchant doesn't want to accept it, but on the other end, he could have accepted because the regulatory framework was there. So in that situation, which was unique, the first time in the world, we have witnessed that the regulatory framework, which was clear and was gave permission, and on the other end, the volatility and the market-driven consensus, which wasn't there. Do you differentiate among these two consensus, or which one is the most important, and why did it not fail? I don't want to, because some people are using it, but it didn't go. I expect.
No, that's an excellent question, Francesco. The regulatory consensus is nowhere near as important as the sort of the widespread adoption. And I think one thing you point out, which is really important, is that on the consumer side, there is, you mentioned the volatility. Volatility is also it may be a downside to merchants, but they can hedge that away. They can take Bitcoin in and then immediately convert to their fiat currency. So that's not a big deal. The bigger deal as a consumer is the opportunity cost. You have Bitcoin, you use it to buy something, and then a year later you really regret it. And I don't know if you guys have had this feeling, but I've been in Bitcoin long enough that I have many regrets, which is, buying something with Bitcoin and thinking, oh my God, that cost me so much value that I spent that Bitcoin. And we all know the famous story of the two pizzas for 10,000 Bitcoin. If you've been in Bitcoin and you've saved in Bitcoin long enough, you realize there's a huge opportunity cost, which is upside volatility. You wait long enough and your Bitcoin is worth a lot more. So you learn not to spend it, you want to hold it because of that. And I think the important point that you make is that even when you clear the path on the regulatory side, it is not enough to get widespread merchant adoption, because you have the factor of consumers not wanting to let go of their Bitcoin. And you also have the factor I mentioned earlier on that there's still not widespread adoption. So as a merchant, there's this large mental burden to try and figure out Bitcoin, right? If, imagine you don't know much about Bitcoin and you have to set up a point of sale system, you have to set up a wallet, you have to understand currency fluctuation. I mean, it's a lot. If you're a baker, do you want to figure that out? Probably you don't care and you're not going to figure it out. So there's not, it's the organic demand, as you said it, Francesco. That is the important, that's the key thing. You need people to be pushing on you, saying, hey, I want to spend my Bitcoin at your cafe. And when you're an owner and you hear that enough times, you're like, oh, I better do this. This is happening at a lot of these big financial institutions, I should say, not as a medium of exchange, but as a store of value. Why are all these financial institutions that have been so skeptical of Bitcoin offering Bitcoin products? Why is JP Morgan offering products? Why is Charles Schwab looking at offering products? It's because it's organic. They have clients coming to them saying, I want to save in Bitcoin, and I'm one of your clients. You're not offering me any products. And so they, because of the organic demand for that store of value use case, they are offering services. That will happen with medium of exchange as well, but we're just far away from the organic case coming up yet. So ultimately, it's not the regulatory stuff, it's the organic demand that will drive the shift towards a medium of exchange.
Thanks, Vijay. So very likely this decade is the store of value decade, at
Yes,
least for the
absolutely. I do not see uh, a strong case that Bitcoin will be widely used as a medium of exchange in this decade. And that's not to say people should not work on the
yes.
technologies that will make it easier for Bitcoin to be used as a medium of exchange. So, for instance, the Lightning Network, I think these are really important innovations, but the true value I don't think will be seen for some time.
Yeah, I think it's more for like say managing expectation. We should not expect that a butcher or a hair cutter or a normal merchant in this decade will be interested in having it at medium of exchange. That doesn't mean that we should not go on. We should go on, and knowing that the global medium of exchange will happen at a later point.
Yeah, I think, Alessandro, that's a really good way of saying it, managing expectations, because I do see people become disappointed when they try to do things like create a circular economy and they want to get everyone in a community using Bitcoin. And when it doesn't sort of work out, they get disappointed and then they start getting on the other side and saying, oh, Bitcoin's a failure, it didn't work. There needs to be some patience, because money doesn't go from being a collectible to being globally adopted in a straight line or obviously or easily in this path that we can all like know exactly how it's going to happen. It took thousands of years for gold. So we should have some patience that a few decades is okay. We can wait a few decades. It will be in our lifetime. So I think it's good to manage expectations in that way and say, just be patient. And I would also say that the store of value function of money is the most important function of money, because when you look at nation states, the thing that they really care about is control of the pool of savings. Being able to inflate money allows them to tax the pool of savings in an economy. So, what matters is, where are people saving? What is the thing that they're saving in? the medium of exchange role is less important. So Argentina is a good example of this, where people save, if possible, they save in dollars, but they spend in pesos. And for the Argentinian government, that is really bad, right? Because if everyone in Argentina is saving in dollars, it's hard to inflate the money supply because people have their savings in dollars. The government wants you to save in their money because if you save in their money, then they can inflate your savings away. Uh, so it is possible to have economies where people are saving in one form of money and spending in another form of money. But it's the form of savings that is the most important thing.
Thanks. I totally agree. It's good to make this point. Before we go to the next question, 1 second, Johan, on adoption. I also agree what you say because I see so many posts saying 100 million addresses adoption. It's overall 20% of Americans are using, but we should not consider, as you said, that it should be or 10% of the portfolio at least, or Croesus, I think, was saying $10,000. That is an amount, like a significant amount, an amount that if you own Bitcoin in the future will make a big change. To consider the adoption, not 1% or 0.2%.
Yeah, I think another thing is when you look at number of addresses, it can be misleading in both directions, right? One person can hold many addresses, and then one address can represent many people. Like if you're an exchange and you're keeping most of your savings in cold storage in one address, that could represent millions of people who effectively own or have a claim on that one address. So address growth is not necessarily the best metric to understand. It is an interesting question to think about, but and it's not easy to measure. Like how many people have more than say $1,000 worth of Bitcoin or more than $10,000 worth of Bitcoin. That's not an easy thing to measure, but I do think that's the right way to think about it, Alessandro. It's the number of people who have meaningful savings in this form of money.
Okay. Thanks. Now, Johan, you have a question on Bitcoin
Yes.
company.
Yes. So no, I like the remark that Vijay made about that governments want people to store their savings in their currencies, and I think I like to repeat sometimes the signal that our guests are providing to our audience, because that way we really can make sure that the audience get the most important pieces out of this conversation. I think this was a very important one. So I really agree. I hope that people realize that. I just want to ask Vijay, when you wrote the bullish case for Bitcoin I think you wrote it in 2017 or 18, how did you think the adoption would go for Bitcoin? Like, did you expect that there was a large adoption through retail and through just people adopting Bitcoin as a store of value, or did you expect that nation states came before companies, or did you even thought of companies? Because I was there in 2017 and 18, and when like strategy started with their Bitcoin strategy or their treasury strategy in 2020, a lot of people were um, they were surprised about, oh wait, companies could be a really big player. I don't know, how do you think, how did you thought about it then, and how do you think about the way the adoption is going with Bitcoin treasury companies, and do you think if it's a net positive or a negative for the whole Bitcoin space?
Yeah, that's a great question, Johan. I think I sort of assumed that retail adoption would lead, and then corporations would slowly get interested, and then they would have the insight that Michael Saylor had, which is that we're keeping our savings or our profits in cash, and they're losing value over time, and we should keep it in something that's growing uh, at a faster rate and keeping pace, at least keeping pace with inflation, if not beating inflation. I do think some things, and then I thought nation state adoption would happen, a few cycles down the line. I do think it's important to realize that when you see a nation state like El Salvador coming in, we can get excited and say nation state adoption's happening, but it's not widespread enough to say that. I think it's almost an exception to the rule. Like, I expected nation state adoption would take a few more cycles because you need that organic growth again, right? The political class follows, in democratic societies, the political class follows the sort of cultural political trends of the population. And eventually, when you have enough people who own Bitcoin, politicians will start thinking, oh, I should start saying things that are friendly towards that demographic. And I think we did have a big turning point in the last US election, symbolically, when the presidential candidate, President Trump, went to the Bitcoin conference and said, everything that a Bitcoiner would want to hear: strategic Bitcoin reserve, reducing regulations, freeing Ross Ulbricht, firing Gary Gensler. Literally everything we wanted to hear, he said it. I think that was symbolic because it was effectively the leader of the most powerful nation coming and bending the knee to us and saying, you are a critical demographic. And we're critical because Bitcoiners tend to be pretty independent thinking and open-minded, right? And so in the US, because the society is so polarized, there's only a small fraction of the country which decides elections. And that those are the kind of more independent, critical thinking type of people. And Bitcoiners are overrepresented in that group. And I think Trump was smart in realizing that and being the first to realize that. And on the other side, you have the politicians who are openly hostile to Bitcoin, seeing what the blowback is for being hostile to Bitcoin. People like Elizabeth Warren, and I'm going a little bit into US politics, so I hope this is not your audience, their eyes not glazing over. But I'll give one more example. There's a senator, Sherrod Brown from Ohio, who's a very powerful senator in the U.S. Senate. He was the chairman of the U.S. Senate Financial Relations Committee, one of the most powerful committees in the Senate, one of the most powerful senators in the Senate. And he lost his race, and he lost it very specifically because the crypto / Bitcoin lobby gave a lot of money to his opponent, who was pro Bitcoin. And that sends a very powerful message, right? If you're in a democratic society and you're a politician, most politicians, to be fair, they don't believe anything. They don't care about anything. All they want is power. But they're looking at the signals. And what are the signals here? That guy said stuff that was very antagonistic towards Bitcoin, and he got kicked out of office, even though he was one of the most powerful senators in the US Senate. I think that last election was a very powerful signal to the political class. So now I think we have something that I've been saying as an open question for many years. When will Bitcoin get political capture? When will it have enough adoption that politicians will find it very hard to do things that are harmful to Bitcoin? And I think we've gotten there. So I think that was a really important step. But now I have to apologize. I think I'm quite far away from the question you asked. So you might have to pull me back, Johan, and remind me what your question was.
I was asking you about how did you think it is developing against how you thought it would be, and towards the Bitcoin treasury company.
Yeah.
You
So
see that,
some things to answer that question, some things happened faster than I thought they would. Like El Salvador was an example, but in general, I think things are going the way I thought they would. We don't have widespread nation state adoption. And one thing I wrote in my book was that I thought the first nations to adopt Bitcoin would be dictatorships, like North Korea, because they have a lot of executive control, right? You can have the dictator say, I just want to get Bitcoin because then I feel safe having some savings in something that cannot be confiscated. And actually, I'm not going to say Bukele is a dictator, but he does fit the mold of having very strong executive control. He has so much popular support in his country that it's run almost in the way a dictatorship would be run. So he can say, "Hey, look, we're going to buy a bunch of Bitcoin," and he can do it because he has that executive control. Whereas the countries which are, typically think of as Western democracies, the US, UK, Australia, Canada, those type of, and European democracies, I still believe they're going to be last in line in adopting Bitcoin. And amazingly, Germany sold its Bitcoin. I mean, you think of all the catastrophic mistakes that a nation can make. It reminds me a little bit of the UK Exchequer sold all of its gold in 1999 at the bottom of the market. I mean, gold has has gone up 20 or 30x since they sold it. Catastrophic blunder, right?
Yes.
For your nation that you've lost this thing which is incredibly valuable. But I will say I'm very pleased with retail adoption. I think the ETFs have been incredibly impactful in spreading adoption of Bitcoin. I know some people who are purists think you should only own Bitcoin in a hardware wallet, and if you don't have self custody, you're not a Bitcoiner. I don't subscribe to that because I think there is still a large, no, the majority of people, the overwhelming majority of people who cannot manage a wallet, that they will lose their Bitcoin. They cannot handle the security involved. And to be able to get access to Bitcoin, to get price exposure to Bitcoin, with a product like an ETF has massively expanded the number of people who now can own Bitcoin. So I think retail adoption is going great. The treasury company thing, I will say that I am very worried about it. It really concerns me a lot that this is a big bubble. Um, when Saylor first came up with this strategy, I thought it was great because what he did was he had an operating company that was building a product and making profit, and he was like, "Where do I keep the profit? Bitcoin seems better than cash," and he was right. But now he has pioneered something that I really worry about, which is financial engineering to get more Bitcoin. And the way he can do that is that the market is valuing his company more than the Bitcoin it holds. And now his operating business is so small as to be meaningless, right? It doesn't contribute to the value of the company at all. Let's say he has no operating business. He has a pile of Bitcoin worth, let's call it 70 billion, and the market values his company at 100 plus billion. This is pure financial engineering, and it's not something that can go on in perpetuity. It just cannot. And so I don't know when this bubble ends. But one sign that people who are in the market who might care about like timing and stuff like that, um, one sign that the bubble will end in this cycle at least is when the premium to the net asset value goes to 1 or drops below 1. That will be a big signal. And the same thing happened in the last cycle, except with GBTC. I don't know if you guys remember the Grayscale Bitcoin Trust, which was, Barry Silbert's thing. Um, it was for a long time the only way for the retail market to get exposure to Bitcoin, and because of that, it had a big premium to the underlying Bitcoins it held. But eventually, people were doing this arbitrage trade, and the premium shrank and shrank and shrank, and then the premium went to zero, and then it went deeply negative. It went to negative 50% for a while until it got converted to an ETF. And the moment that it went to zero, that was the exact top of the market. So be very wary. If you see the premium to NAV on all these treasury companies drop to 1 or go below 1, that's the sign that this kind of speculative mania in the last phase of the bull market is over. I don't think we're there yet. I think we might even have a whole year in this cycle. I don't know. And this cycle feels very different than previous ones. It feels much more measured and slow and steady. So who knows, this could go on for much longer than I expect, but I do worry that the treasury companies are a bubble.
All right. Thank you.
Thanks,
Yes.
Vijay. Also, you introduced the next topic on Bitcoin cycle. also, as you said, the cycle look different. Questions for you is, are you disappointed that Bitcoin price is only at 113, 14K 9 months after we broke 100K? And how do you think it will play out in the next 6-12 months?
It's very hard to say I'm disappointed with Bitcoin being above 100,000. I mean, it's such a great milestone for
Sorry,
folks.
let me
I've been in
rephrase.
the. Sorry,
I
go
was
ahead,
saying,
Alison.
sorry, Vijay, I was referring to we broke 100K in December 2024. And that I
Yes,
agree was a great milestone. But 9 months after we breaking 100K, we are
yes.
at 113K.
Yes, yes. I
Where
know.
is going?
I understand your question, Alessandro. We have seemed to just kind of stagnate where we are. But I was just making the point for someone who's been in this market. I've been interested in Bitcoin since 2011. Just the very fact that Bitcoin is above 100,000. Let's say it's there for another year. Let's say we're at the same price in another year. Will I be disappointed? Yeah, I'll be a little bit disappointed, but uh, I also think it's an incredible testament to how far we've come. I mean, if you spoke to people 3, 4 years ago and asked them, "Do you think Bitcoin could be above 100,000?" I think most people would be very skeptical of that.
Yeah.
The other point I would make is being an investor in Bitcoin is kind of like being a poker player. Uh, there are long periods where you're just bored, senseless. You're not doing anything. You're folding every hand, and then the very brief moments where you're incredibly excited or incredibly stressed out. And
Yes.
that's what investing in Bitcoin is like. We're in this kind of boring phase right now, and this cycle feels different because the previous cycles were all parabolic. They you could fit a parabolic curve to them, and there'd be big corrections, and then the market would rebound very quickly. This cycle feels like we have prolonged periods of sideways grind, and then a brief explosion of interest, and then another long period of sideways grind, then another brief explosion of interest. This has happened 2 or 3 times in this cycle. Um, and I think we're in that period of just grinding sideways. I do think there will be a catalyst eventually, but I wouldn't be so presumptuous as to say I know exactly when it's going to happen. But I do think when we see a catalyst, we'll see another move of Bitcoin. The last two moves were, I think, about 50 to 60%. So I would not surprise me if this move we go for another, I don't know, let's call it 3 months. And then suddenly in December we jump from 105K or something like that up to 150K. I totally think we could see something like that happen in very, very short order.
Thanks. Thanks.
Yes, I
You're
think.
right. Yeah, Francesco, please go on.
No, at this point, it will depend also. Usually, after 18 months after the halving, the supply shock manifests itself. We're gonna find out in November, December. So it marks 18 months. So there are some on-chain metrics which could play or not play a different role this cycle because there is access, so more access through ETFs, and that's what is driving the correlation with the liquidity is was until a couple of months ago, but really staggering that was so precise. So this means that we are, as you said, in a different framework right now. And I find it difficult to believe that we are going regarding retail adoption. The big spikes we saw in the past find difficult to believe that we go from 0 to 1 like a lot to nothing. So there will be some degree of retail adoption, just that will be masked a bit, but also the supply shock will play a role. So we might see maybe 50% of what we have seen. Even if this is an institutional cycle, I have some problems to think that will be all driven by Wall Street. So I think it will be a mixture. That's what I want to say. And on this point, given that we talked about access to the asset, to liquidity, I mean, going a bit back also, and crossing lines, what Bitcoin is meant to be to democratize access, to finance. And I remember in our last episode 1 year ago, you were a bit bullish on DeFi, on Bitcoin. So the new financial solutions, which could have been happening on top of Bitcoin layers 2. And we saw some of that this year. We saw, for instance, stablecoin being deployed on the RGB on layer 2. We saw something like that. So can this mean access? Can this mean a medium of exchange which is indirect medium of exchange, because it's not possible to utilize Bitcoin as a medium of exchange right now, but can be utilized through stable coins? Or do you think stable coins are slowing down the process of transition from Bitcoin from store of value to medium of exchange? All this framed in the D5 scenario, if this will be helpful for Bitcoin or not?
I didn't. So I was stay with the previous point that I had made, that I think the adoption of a medium exchange is still going to take a long time. I think I would need to see specifically what I said in our last conversation, but to me, the financialization of Bitcoin means financial institutions offering products around Bitcoin and offering liquidity services around Bitcoin, things like options contracts, loan products, derivatives, all of those things. To me, that is the financialization of Bitcoin. And one of the things that's great about Bitcoin is it's an incredibly powerful financial product, because it is, someone called it, and I think this is very true, pristine collateral. It is a great form of collateral to take as a financial institution, because you can custody it very easily. You can accept it across the globe very quickly. It's much better collateral than gold, because there's no counterparty and it's easy to accept from someone on the other side of the world. So I think there's still a lot to happen on Bitcoin being adopted in the financial system, and that's what I mean by the financialization of Bitcoin. And I spoke with one of the very senior executives at one of the biggest financial firms that has tens of millions of customers in the US recently, and they said they're going to build out a suite of products for their clients to be able to get access to Bitcoin. And that's a big deal in terms of adoption. But that process takes, it's going to take a few years, because you're a big company. You've got to build out the software. You've got to build out the customer support. You've got to build the systems, the risk control, all of that stuff. But that adoption is happening. It's happening step by step in the background. And what it'll mean is that customers of this big firm in the US will have the ability to buy spot Bitcoin. Then they'll be able to do options, sell covered calls. They'll be able to loan their Bitcoin or borrow against their Bitcoin. That's very, very powerful, especially as Bitcoin adoption continues to grow and the price level goes up. More people will be looking for those kind of products, right? If you have a lot of your savings in Bitcoin, but you need some liquidity, you want to buy a house, you need a car, you want to send your kids to school, whatever it is, you will be looking for those financial products, and those are starting to come online. But that process is going to take, I think, a few years.
Yeah, thanks. So I'm more bullish on the financial banking system, like the asset, the collateral.
I think in the short term, Francesco, let's say 2 to 5 years, I think that's where there'll be a lot of work done. The medium of exchange story, I still think that's a decade-long story.
Thanks.
One thing that we are missing now this year, especially in the second half of 2025, is the retail interest on Bitcoin. And I think this evolved quite a lot versus the past. We were discussing other episodes what happened in the last cycle or in 2 cycles ago, but mostly last cycle where most of the retailers joined, was really they moved to Bitcoin because they were really interested on the asset, and they were against 99% or 99.9% of financial institutions. So on one side, it was harder to get in Bitcoin. But once you understood Bitcoin, you knew that you were among the few people who were the first in understanding Bitcoin. I think now what is the biggest obstacle for the retails, for many retails who are already investors, maybe can be the ego, because they know many or some among their friends, colleagues, contact in a club they are inscripted, that they have Bitcoin. And if they move to Bitcoin, they indirectly admit that all the people that who talk up to them about Bitcoin, they made better decision. And this admission that they didn't make the best decision in the past, despite they think that they are good investors, is preventing them to finally move to Bitcoin. Do you think this is a big obstacle for retail investor, for retail involvement?
Yeah, I had a tweet thread on this, I think 5 or 6 years ago, which talked about the number of touch points that you needed to have before you got interested in Bitcoin. How's the number of times that someone tells you about Bitcoin before you think, what is this? Should I look into it? Should I buy some? And for a lot of people, a lot of retail customers, maybe it's 10 people that they have to hear from saying, I just bought some Bitcoin, before they think maybe I should consider it as well. And I think that's true every cycle. It happened to me. I had
Yes.
friends who told me about Bitcoin. This was back in 2011. Uh, and I didn't really pay much attention. I knew about it, but I didn't pay much attention until 2000, I don't know, late 2012, 2013, when I started thinking, hey, this is actually important. And two of my very close friends I was lucky because they kept bugging me about it. You need to look into this. Why aren't you looking into this? Not everyone is so lucky that they have a friend who's constantly shaking them saying, look at this. Um, but I think that's true uh, for people in later cycles too, who may not have that natural affinity to Bitcoin because of ideological reasons. Because we love human freedom and we believe in free trade and things like that. We already had an affinity to Bitcoin. But for folks who don't have that, they will still hear about Bitcoin from enough people around them that eventually they will come to it. It's just, it takes time. And one thing I like to say is that information travels at the speed of light, but understanding does not. And it takes time for people to hear and think about looking into it and then understanding it. Uh, I think the biggest favor you can ever do for friends and family is to tell them, before you think about understanding Bitcoin, just buy a little bit. Just buy a little bit. Because if you buy a little bit, it gives you the incentive to look into it more.
Yes.
And that was good advice that I got early on from my friend who said, just buy some and then you can figure it out later. Uh, Especially if you're, allocating such a small percentage, maybe 1% of your portfolio to Bitcoin, you shouldn't feel afraid because you've sized your position to the point where it doesn't matter how volatile it is. It doesn't matter if it drops 50%. If you've only got 1% of your portfolio in it, it's not going to hurt you. So that's the good advice I would share with folks who are still skeptical. And if you know any of them, just convince them to get a tiny bit of Bitcoin and then start thinking about it.
Thank you. Thanks, Vijay. Vijay, Johan, next question for you.
Yes. Vijay, you as a software engineer, I wanted to ask you, how do you think about how Bitcoin should upgrade, like protocol or the consensus rules or just policy rules? And you don't have to touch on like the whole discussion about core versus not. Maybe if you want to, you can. Please go ahead. But um, I'm just thinking because I have this feeling that the people who are has a computer science background are more likely to try to improve the protocol, and the others that don't have that background are more like the monetary maximalists. So but I got a feeling you are both. So I really want to know how you think how Bitcoin as a protocol should proceed. And yeah, so I don't know, let me hear your thoughts, please.
Yeah, that's a great question, and I have maybe a controversial take on that. I am a software engineer, and I do think you're absolutely correct. People who are engineers who do not have much understanding of economics or monetary theory, they tend to be tinkerers. They want to fix things and improve things, and at the extreme, those kind of people end up in Ethereum because just constantly fiddling and changing things is what they think should happen. It's a software system. We should just constantly change it. But what they don't understand is this is money, and money should not change. Money is a foundation for all trade and savings, and you need to have confidence that it's going to remain as it was. And gold is not something that ever got upgraded. Gold is always gold. You didn't add features to gold. You didn't make gold have some of the features of copper or silver, because those metals have some actual utility. You can use them for things like copper is good for conducting electricity, and silver is good in lining dryers. I don't know if in Europe you probably don't use dryers, but we waste a lot of energy in the US, so we have dryers. Silver is good in.
do too.
Oh, you do? Okay. In Australia, where I come from, they're very frowned upon. People hang their clothes outside. But my point is that gold never needed to be upgraded. Gold was good as money. And it was good as money because it was immutable. It never changed, and it was had all the properties it made for good money. And what I really worry about is that there is a mindset that we need to improve or upgrade Bitcoin. We don't. Bitcoin has all of the things that it needs for global adoption already. And I am actually fairly extreme in this. I'm open about it too. I've debated this with people who I really respect, who are kind of on the more developer side, like Brandon Black. We had a debate on the Stefan Livera podcast about ossification. And I'm very pro ossification, so much so that I believe that even if Bitcoin had not adopted SegWit, in the block size wars, there was the SegWit adoption without the increase in the block size. Even if that had not happened, Bitcoin adoption would be at least where it is now, if not more, because I think what we need is confidence that the protocol is immutable. Because a true value proposition of Bitcoin is that we all believe that the supply schedule is fixed. There's no more than 21 million Bitcoin. And we believe that because it's incredibly difficult to change Bitcoin. If it becomes easy to change Bitcoin, then it becomes no different to central banking, right? The difference is that instead of having central bankers make these decisions, we have the developers making these decisions. And to weigh in on this core question and not, I'm very disappointed in what Core has done in this last release. I feel like they have ignored the outcry almost in the market of Bitcoin owners saying, we don't want you to make this change. We don't think we need this change. Why are you we shouldn't just be making a change because you developers think it's cool to make this change. It should be changes that are critical fixes to the protocol in case there's a bug or something like that. I will say, on the other hand, I do not believe knots is a solution to Core. I think it's equally, if not more dangerous, because it's really just one guy who's like making changes and pushing changes to production on his own. It's actually scary to have that much control in one person. We do need a decentralized organization which will make releases to Bitcoin that will fix things that need to be fixed or improve the efficiency of the protocol, the resilience of the network, but isn't going to fiddle with consensus changes or get anywhere close to making consensus changes. And I think Core is kind of ignoring the market a little bit and saying, we don't care, we're developers, we have control over this.
But
And it's just, yeah, go ahead.
would you think that like the competition is a great sign for Core to acknowledge that outcry? Because
Yeah, it is. The fact that there are so many people who are running Knots nodes should be scary. I mean, it's a protest, but it should be scary to everyone in the network. We do not want the network to be running on Knots. It's not good peer-reviewed software. And we want the network to be running on good peer-reviewed code. And Core is that. What I would love is if some number of people who work on Core said, look, this has gone too far. We're going to create a fork of Core, which is just going to maintain Bitcoin, essentially ossify Bitcoin, but put in critical bug fixes if we find them. There's one counterexample that I will give that I think that folks on Core should be thinking about and working on, which is quantum computing.
Mm.
Quantum computing is a real risk to Bitcoin, and maybe it's not in the short term, maybe it's 20 or 30 years from now. There is some probability that quantum computing is a risk within 10 years. And if that turns out to be the case, the market will price it in much, much earlier. If it is the case that a quantum computer can break ECDSA in 10 years from now, the market will price that in today. There will be big movements in Bitcoin's price because of that. And of course, it will affect all sorts of things across the internet. It will break security everywhere. So I think Core should be thinking about that. What is the solution to quantum computing becoming a real risk to Bitcoin? Instead of, messing around with this op return stuff, which is so inconsequential and causes so much contention in the community, work on a real problem. The real problem is, like, quantum computers could break the encryption of Bitcoin. And if we don't have a solution ready for that, the whole thing dies. But we're messing around with this issue that people don't want, yet they're pushing it on us. I don't like it. I don't think it's a good idea. And one solution I would say to anyone who is running a Bitcoin node, you don't need to run knots as a protest. You can just stay on Bitcoin 29. You don't need to, this isn't like Microsoft Word. It's not like an operator. You don't need to upgrade, because consensus remains and you can stay on Bitcoin 29 for effectively forever. There is some risk that someone finds a big security hole in Bitcoin 29, but then I think you'll find people who'd be willing to patch and fix Bitcoin 29 without bringing in the things that are in Bitcoin 30. I think that is the correct way to protest that what Core has done in this latest release. So I would say, I want to end though with a compliment. The folks who have been working on Core have been such amazingly good stewards of Bitcoin for such a long time, for 15 years. So they deserve a lot of credit. I would just urge them to focus on the big problems that Bitcoin could face in the future, and focus on the critical things, the critical fixes where they have very widespread consensus and there's very little controversy about doing whatever changes they're going to do. I think it's dangerous for them to go into changes which are contentious and where there are so many people in the community who are opposed to those changes. I think there is some worry that this contentiousness is manufactured, that it's just one or two people who are causing all this turmoil and fight online. But I think it's actually a widespread belief amongst people who are Bitcoiners. You don't need to change it. We don't need this stuff. Bitcoin is fine as it is. We don't need to change it. If there is some bug that you find, definitely go fix that. But our ideal that we should be seeking is gold. It's money that can't be changed in digital form. So we need Bitcoin to get there, and we need to eventually get a system that is fully ossified and that nobody can change, that all of us will trust that the 21 million is set in stone.
Yeah, thank you for your very thoughtful and a very, I think almost weighted opinion about it. And on the quantum thread, I heard the Jameson Lobb his speech in Antwerp, and he was also talking about this potential threat, and also about that even if we come up with a solution and with an upgrade, then it might take years for everyone to transfer their Bitcoin to new wallet. So I agree that that we the developers of Core, or the ones who are able to do this, that we start with it, because it will take also a lot of time, and it would be good for miners, and it would be good for fees, because probably everyone needs to transfer their UTXOs to new upgraded wallets. But yeah.
Yeah, and it's not just time to transfer to addresses which are quantum resistant. There's also the time to get consensus, because there are solutions to quantum computing. It's not like we don't know how to solve the problem, but what do we do with the addresses which are dead? But you don't know they're dead, right? Because we've had addresses recently from 2011 which have not moved in 15 years, and suddenly 50,000 Bitcoin move and then they get sold, right? Someone has been sitting on this address for that long. We don't know Satoshi's addresses. What do you do with them? And getting consensus around that will be very difficult, because there are two potential solutions there. One is you just kind of leave them out there and you don't change anything, and it's kind of a bug bounty. If you are able to get quantum computing work, then go ahead, steal Satoshi's coins. That's fine, you can do it. The other is, but the scary thing is that those coins, if they're stolen, are going to hit the market, and then they will dramatically, knock the price down. 1,000,000 coins getting sold at once is going to have a big impact on the price. The other solution is you do some kind of hard fork, which says all of those coins after a certain grace period are dead. So you give people 1 or 2 years to move old coins to quantum resistant addresses, and if you have not done that, your address is dead, and you can't make any transfers on those addresses anymore. I think that question alone is going to take a long time to get consensus on, let alone what you say, Johan, which is that moving all the addresses will take a long time, which is why we should be thinking about this right now. We should be discussing it. We should be trying to figure out, like, what as a community is the right solution to quantum computing becoming a threat within 10 years.
Yeah,
Thank you.
that intersects a bit with the ossification topic, because it's true that gold, but gold wasn't untouched, not changed, but gold is not a protocol, a communication, a monetary network. No, so it is a bit different. And yes, remember it was in Prague, there was a Giacomo Zucco stage say that it's like a TCP/IP, so it was pro ossification. He said that then if it faces a life or death threat, even if it's ossified, the network can still be changed, because otherwise the network dies. Yeah, but that's extreme scenario. If you are into software and then you have a good consensus, you want to change before that happens. So in front of quantum computing threat, and I know there are different proposal that you might say that ossifying not yet there, or if you do it too early, there are still some risks to do that. So it's would say not exactly the same thing than gold. But yeah, that will take another 2 hours to discuss, I guess. So anyway, I just to inform our listeners that this episode is brought to you by BitVault. BitVault is the first wallet solution which it makes you able to offset physical attacks and hacks thanks to our time delay over multi-sig technology. It's basically like a bank vault with a timed padlock. You can set how much you have passed, and you just lock your coins on a miniscript technology. I invite you to head over to the bitvault.sv website and just try it out. Thank you. Other questions?
Thanks, Francesco. Thanks, Vijay, for the point of quantum computer. I totally agree. Is maybe the biggest threat on Bitcoin in the middle long term. Also because many other threats that were maybe there from the past are disappearing. One comment on what you said. Playing in the long term, like Bitcoin is a poker game, but we have to be patient. And also, as you correctly mentioned, last year we had a brilliant performance, magnificent, 121%. But at the end, it was maybe in 10 days. There were some days in February, March, from 50 to 70 something. And then in November, we went from 70 to 95 in a few days. So maybe it will happen also this year. What I would add is not only it feels being in Bitcoin is not only to be in a poker game, but to be in a poker game and knowing that you have a royal flush and that in the long term will play out. We are trying to tell to other people that, hey, I have a royal flush, but many people are still not getting it.
Yeah,
But
they all think we have a seven deuce,
yes,
but they don't know.
they will know at one point.
Yeah, when we show our hand, eventually they'll know.
There will be signs. There will be signs.
Yeah.
I think we are approaching also the hour. My last question for you, Vijay, is I remember you wrote a post on paper Bitcoin. What happened in Bitcoin? Many people are mentioning that is maybe paper Bitcoin, and you were against this narrative and explaining why. I agree with you. It would be great if you can also summarize it here for our listeners.
Yeah, I think there's a lot of frustration that the price isn't going up fast enough. And I think that manifests itself in conspiracy theories, which is that there's these fake Bitcoins that are being manufactured by, I don't know, the exchanges or whatever, and that's suppressing the price. And I'm very familiar with this conspiracy theory because when I was a gold bug many, many years ago, I heard exactly the same conspiracy theories about gold. Gold's not going up. It's because all these financial institutions are creating paper gold, and that's suppressing the price of gold. And these conspiracy theorists always would go very silent when gold started going up. They would disappear. Gold has been going up in the last year, and no one's talking about paper Bitcoin. Paper gold now. It's that the theory is gone. The truth is that when the price gets to a certain level, it unlocks supply because there are people who have a number in their head where they think when Bitcoin gets to 100,000, I am now worth, I don't know, call it 100 million euros. And that's a big number for someone who's been waiting for a long time to realize that wealth. And what you will see, and maybe not even 100 million, I think there are people who've gotten to the level where they've waited over a decade and now they're worth billions of dollars or billions of euros, and they want to unlock that and they want to live a different lifestyle. Because imagine the only wealth you have is Bitcoin. You're living in an apartment somewhere and you're on paper you're worth billions of euros, but you don't have a nice car, you don't have a yacht, you don't have anything, but you can unlock that life if you want. And what you see is actually a lot of old Bitcoins have moved. And there's several reports of there was a block of 80,000 Bitcoins being sold, a
Yes.
block of 50,000 Bitcoins being sold. Uh, and the metaphor that I like to use is Bitcoin's price is like waves crashing against an iceberg, and they keep crashing. The price goes up and they keep crashing, and eventually a sheet of ice breaks off. That's the supply. That's a big whale saying, "This is so much I'm going to sell." And that supply crashes into the ocean, and that holds the price down. That's what's happening. 100,000 was such an important psychological number for a lot of old time whales. I would say they're probably maybe a dozen of them, maybe more than that, who've taken big blocks of supply off. The good thing is, even though the price is not doing anything and it's frustrating and it seems boring, underneath the hood, something is happening. And that's the transfer of supply from people who are effectively weak hands. You're a weak hand if you're sitting on 100 million or $1 billion gain of Bitcoin because you want to enjoy that wealth, right? So it makes you a weak hand. You transfer that to someone who's just coming into Bitcoin and has conviction that they want to get the next 3x or 5x out of Bitcoin. They are much more likely to want to hold through that. Uh, so under the hood, even though the price is staying the same, you're getting a transfer of ownership from old time whales to new time holders. And eventually, once enough sheets of ice have broken off, it will stop and the price will start moving again. You don't need any conspiracy theories about paper Bitcoin to believe there's a good reason for the price to be stalled. And eventually, when enough supply has been transferred, enough of these old time whales have said, I've got enough liquidity now, I can live whatever life I want, the price will start moving again.
Thanks, very insightful. I also think maybe with the Bitcoin movement or Bitcoin world, maybe we should stop to call weekends everyone who is selling. Weekends maybe someone who sell because panic sold, he bought at the top and he sold, or he bought at 80K and he said it's enough, 100K, 20%. But those who, maybe a person who bought 30 Bitcoin at 1,000 and now it is 100,000, if he can sell one Bitcoin, upgrade his life, actually, that's the whole point of Bitcoin, of money. So it is what it should be.
Yeah, I agree. I think that the correct way to think about it is if selling Bitcoin can help improve your life in some way, then it makes sense to sell it. But one other lesson I learned from early in my career is with any life-changing investment that's going to change the world, you should never sell it all. And I was an early employee at Google, and I sold all of my shares before the financial crisis. And at the time, it was great timing. I sold before the market crashed. But in hindsight, it was actually terrible because since that time, Google has gone up, I think 20x. So you can optimize and do something which seems smart in the moment, and then it's actually really bad in the long term. So selling all of my Google shares was a really bad idea. But the good thing, the lesson that I learned was if you have something in investment which is going to change the world, you got to hold on to it and for as long as possible and never sell all of it. That's the one lesson I would give. If you need to sell to improve your life in some way, that's great, but make sure you keep a core position in that asset.
Totally agree. Totally agree. I was referring to someone who sell maybe a small portion to upgrade his life for a period. Yeah, totally agree. Thanks for your reply. Okay, we are over reached 1 hour. Thanks, Vijay,
Yes.
for all the answers that you made. As always, great conversation, great insight. I think also the watchers in here and X, then in our YouTube will or in Spotify will be appreciating your presence here.
For
Thank you,
sure.
Thanks for
Alessandro.
being
Thanks for having me, guys. It was great seeing all of you again.
Thanks,
Thank you.
Francesco. And thank you, John, also for hosting.
To our listeners, just subscribe to our YouTube channel. Gonna help
Yes.
us
Of
to
course.
move new content. So, Vijay, see you next year. Who knows at what price?
Yes.
Hopefully not 100,000.
Okay.
Yes.
We had before closing. We had last year. It was 50 something. It was April. I remember it was April, so it was like 50 something. Now it's double. But for Bitcoin, it's not enough. You want more.
When
Thanks,
Okay.
Vijay.
when you signed my book, it was at $54,000. There was I think 4 years ago. When did you brought the book out?
2001, yes. So 4 years ago, yeah.
Yeah. Right. So
Nice.
$60,000 in 4 years. It's okay.
Bye,
All right.
all.
Bye, Vijay. Thank you.
Bye, guys.
Goodbye. Have a nice day.